Great. As we have our participants join in today for this very, very important and exciting session that we all are looking forward to, I would take the time to welcome all of you and specifically the expert speakers who have given us time today and have deliberated on this particular subject for a very, very long time to make it meaningful for the audience that is joining in today. Good afternoon to all of you. Today we are here to discuss about a very important subject, and that is about how to increase profitability and scale the business for the staffing companies. Every company which is at a different growth stage has a very different kind of a requirement when they are growing. Sometimes it is a technological demand, sometimes it is a requirement of the manpower resources, sometimes it's the funds, and sometimes it is an amalgamation of all of it. So today, the experts today that we have with us will be taking us through the journey of not only what their experience has been, but also few nuggets of some advices that could be used as reference points for all of you to take it forward. May I request Lohit, who's President Indian Staffing Federation, to please give us some insight how the journey can be an exciting journey in the staffing industry for the players who are not only joining in the industry but also growing into the industry. Over to you, Lohit, before I invite the panelists in.
Thank you very much, Suchita, and good afternoon, everyone. I hope all of you are safe. Your families are doing fine, and in these challenging times, we are just looking forward to better situations and better times in front of us. In the last 15 odd months since India and the world has been hit with the pandemic and with COVID, I think one of the points which has become center stage across the world is employment. And within employment, it's the staffing employment or the staffing industry, which definitely has been taking center stage right now. In the first part of last financial year, if you really look at H1, a lot of staffing companies, a lot of leading employers, government of India, everybody basically spoke about the number of job losses, the amount of employment which was degrowing. At a matter of time, people started talking about whether staffing companies will even be able to weather this storm or not. And with not enough data available out of India, because Indian staffing is only being talked about in the last 10 years since ISF came of vogue, I had no choice but to rely on my fellow members from Edeco, Kelly, Randstad, and my Manpa, which are all listed companies globally. So I went back and kept looking at what happened to them every time there was a global financial crisis, say from the 90s to 2000 to 2007 and 8. And the only thing which gave us heart and which gave us a purpose to weather this storm was the fact that every time something like this happened in the world, not a pandemic, but any other event like this happened in the world, staffing did come down for some time, but only to rise faster, higher, above the previous highs. And that's how resilient this entire industry is. In the second half of last year, while all of the staffing companies have reported better numbers, have reported growth coming back, the customers have reported growth coming back, the mix has changed, the segments have changed. A lot of industry today is giving 30-40% kind of growth, while there is some industry like travel, tourism, hospitality, which continues to be impacted in the second wave as well. So when we now talk about the fact that how is staffing doing, how is employment doing, how is a staffing company doing, I think we need to ask a little deeper within the segments, within the regions, within the locations and all. You can't just clean it with one brushstroke and say that all of it is doing well or all of it is not doing well. Look at the example of the IT industry. Since 2017-18, the IT industry wasn't doing as well till about 2020, and I'm talking about even the tier 1 IT companies. They were just having a very modest single digit growth rates. And then see what has happened to them since the last 15 months when the pandemic hit the world over. Now people are saying that IT is here to stay for the next 5-7 years. There's going to be a multi-year cycle as far as IT industry is concerned. So today we have an amazing panel in front of us, and all our speakers are going to talk about this. They're going to talk about how they have all come over the hump, which was COVID 1.0. How are they weathering the storm in COVID 2.0? What kind of growth plans and growth areas are they looking at? What are the segments and industries which they feel that they will get growth from? And most importantly, how as an organization you can probably weather these storms, how as an organization you can make yourself stronger, and definitely ensure that your organization grows faster than the rest of the country, faster than GDP. So over and back to Suchita, to all my fellow panelists and member companies joining today, thank you very much for taking this time out. It's been a topic which is going to create a lot of energy, and we already have crossed the 100 mark. 107 people have already joined. So thanks once again. Have a great session. Have a great conference. Back and over to you, Suchita.
Thank you so much, Loet, for the brilliant set that we have obviously expecting the panelists and the subject matter experts to cover. Quickly to introduce our subject matter experts, we have Pramod Pachesia, who is the COO of 2Coms and who is also going to be chairing the session today. Thank you so much, Pramod. May I also take the time to have the pleasure to invite Mr. R.P. Yadav, needs no introduction in the industry, CMD GNES Consultants Limited. We have Vishwanath, who is the CFO of Randstad India. We have Somnath Banerjee, Director of Orion Corporate Alliance. We have Anil Ethanur, who is obviously the co-founder and the lifeline behind Xfino today in a lot of matters. With that, I would not take too much time, and over to you, Pramod.
Thank you, Suchita, and thanks, Lohit, for setting the context right. And thanks to ISF. I think 10 years the industry is known, and Lohit, you're absolutely right. 10 years back, if we were to look back at a lookbook to find out what's happening in the industry, there was no reference point. One of the things that before I begin is that as an entrepreneur, a lot of us who've gone into staffing industry have come into industry, probably stumbled upon in this industry. Early stage of the staffing players have really not aspired to create a staffing or a recruitment company. And a lot of us got into the same with absolutely no prior ambition to sort of start a recruitment and a staffing company. Some of us actually didn't even know the word, how it started 20 years back. Today, of course, we have a reference point, and I think this session today achieves or hopes to come back and create a session for all the budding and aspiring as well as mid-sized entrepreneurs or organizations wanting to scale. I think scalability, to my mind, what comes to me, the first, when you start a journey in organization, the first set of, let's say the first 1 crore itself is a nightmare for an organization or an entrepreneur, and from first to 2 to 5 and 5 to 10. And I think that's the milestones that one needs to sort of cater to. I think once you've started doing 2 or 3 or 4 of these milestones, the journey sort of becomes very exciting. But for an entrepreneur, both the journey itself as well as the milestones are very, very, very exciting times, I must say. It's also challenging and exciting. I hope today's session, we are able to create and unravel some of those questions which would come to our minds. I think all of us with our wisdom will try and support you. My first question is to Yadavji. I think Yadavji, you're a veteran in the industry. Your company, your organization is pretty old. You've seen it all. So I want you to understand, I want you to tell us how important is it to have a good vision, and what sort of vision should someone who's either a budding entrepreneur or a MSME should have, and how do you go about creating a vision, and how important is it for an organization?
Okay, so good afternoon, everybody. Lohit, Suchita, and all the panel members. Thank you, all of you. I think Lohit sent one of the context which I really liked. He did the survey. I mean, his company did the survey with all the listed company, particularly which is in the foreign land. And they found out that with every setback they bounced back. In my opinion, employment and unemployment, both the different side of the coin, was always available, whether it was, 10th century, 9th century, or 15th century, 20th century. So fortunately, we are in a business which is there, which was there, and which will be there. So that gives us a big solace and security to all of us. And how much cake we get, it is up to us. Now, when we talk about vision, see, vision differs person to person, organization to organization. But in my opinion, you can create a vision if you have the understanding of the history, that means understanding of the past. If you are a data-oriented person, if you have done the research of the past, if you do the research of the current, you try to understand the current trend, and you try to understand what is happening in the industry, then you can create a vision. For example, when I started the recruitment company, of course, I was also 16 years in the job. Like Anil, also he has left the job and started the company. So I was also in the job for about 16 years. Then when I decided to start Genius, I became on the panel as a consultant with one of the consultants, small consultant in Calcutta for 2 years. So that was in the evening, after 6 p.m. onwards. So I used to take the interview, be part of their committee members. And so 2 years really gave me a time to do the research and to understand what the business is. So you cannot have a vision just like that. I mean, nobody's just born like with a vision. The vision is always on the basis of what you have a knowledge of the past and of the history. So if you want to create a vision about your company, about the product, about where you want to go, in my opinion, you should create a good database in the company. You should create a good MIS, whether it is a product wise, whether it is a branch wise, whether it is a location wise, whether it is a client wise. And once you create that and you have a good knowledge of that, and if you study the current trend, what is happening in the company, based on that, I think you can have a much more broader vision and you can steer the company toward that vision. Thank you.
Thank you, Adavji. I'm happy to hear the sentence that, and it's a very nice sentence. It's a takeaway for me. We are in the business that was there, is there, and will be there. So that's a very nice statement you made. Interesting. And so true it is, because manpower is not something that will sort of go away, and it will remain. And maybe forms may change, modes may change, but we will need to continue to have some amount of I mean, it's always going to exist. So very nice. Thank you. That's a nice one. My next question is to Anil, and I think I take from vision. What comes to any entrepreneur, and specifically for staffing, what sort of ambition and milestones one must set, Anil? I think having done the vision, I think very clearly we need the ambition and the milestone in an entrepreneur and the organization. Would you like to throw some light on that?
Yeah, Pramod, so if I look at the landscape, Pramod, today, I would say less than 5 crore would be micro enterprises. I would say 5 crore to, let's say 25 crore would be small, size companies. And 25 to, let's say 200 crore would be medium-sized companies. So when you look at the MSME space, I mean, this is what it is. And once you're a 200 crore company, I think you've really hit a sort of a critical mass, and then, you can really expand. And take some cues from a large market like US, which is about $130 to $150 billion market. There are about 157 companies that are more than $100 million. Okay, so if I were to just juxtapose our own market and the potential that is there, today we will have about 7-8 companies in the 100 million would translate about 750 to 800 crore business, right? So that's what it is. So India can easily have 50 companies that are more than 100 million, compared to where US is. US is 157 companies, but India can easily have, at least 50 companies. India can have at least $8 to $10 billion companies. We see 2 companies already inside, and certainly there are more, potential for about 8-10 companies at least. So everybody recognizes that there is a huge potential, and relatively this is a young industry. I think if I trace back the history, probably I would say late 90s to early 2000 is when the industry started taking shape. But MSMEs do play an important role. I mean, almost 65% of the business today that is done in the staffing of the $10 billion is occupied by MSME space. So there is an opportunity to be an MSME forever, but an MSME can also lose its tag and become a 200 crore company. So it's up to the ambition levels of an entrepreneur. a promoter to really realize the potential that the market, and I would say that we are in the best space, though we have just been through a pandemic. I would still say that we are in the best space. Goldman Sachs report indicated that our $10 billion industry can go 6 times in next 10 years. So we're looking at $10 billion industry becoming 60 billion. So I would say this is exciting time for, staffing companies. Of course, we'll have to, weather some, rough patches. And we saw that in year 2000 when dot-com bust happened, when, financial crisis happened in 2008, and we see one more. And this is, of course, the most severest, time that we have seen. So obviously, an entrepreneur probably needs to look at, given the capital, investment or adequacy that they have, what kind of products and services, which is the business mix they're going to offer, to the industry. So I would look at it as, once the capital is dealt with, I would look at it as probably people, product, process technology, and then profits. So I would probably sequence it like this. And in the product mix, probably one can see how much of professional staffing, how much of general staffing, how much of permanent recruitment they need. And it's always good to create a niche to begin with. Of course, being an MSME, you can't do everything. You have to make up your mind on a specific, segment, maybe an industry, maybe 1 or 2 offerings, not more than that. And once you build a certain scale, certainly it's possible to either deepen it or further, expand your services. And one of the things that I've learned from a lot of overseas, markets is that they develop niches in many, many areas. Could be healthcare, could be in education, could be in technology, could be in consumer, blue collar, white collar, all kinds of areas. So there are lots to learn. And, the global, staffing market started around the Second World War time. So there's enough more, examples of, history one could learn from. And if the sequencing would be there, I would say that, if you follow these steps, probably you're closer to, realizing your vision. But yeah, an ambition is required. The promoter entrepreneur needs to, probably bring in people. That's a critical part. It's also one of the most toughest part, to have more people join in this journey. And it's not easy to find people, to join you, and particularly in the staffing industry. All of us struggle with, hiring good people. So once the capital, adequacy is there, what products and services you're going to offer, what business mix you're going to have, then you have the people, and then process and technology, and then you, go on to, looking at profits. So this is how I would like to sequence it, Pramod.
Really nice, Anil. I'm thankful that you mentioned about the size and opportunity ahead possibilities in India. I think you set some milestones and ambition already amongst the members with 50, 100 million organization, 1,000 million organization, about 8 to 10 billion dollar organizations. I think those are good ambition and milestones for a lot of us. And it's so true that our size, and I think the staffing industry is India's size currently is, I think we're just the tip of the iceberg, and yet to be explored. And thankfully that you mentioned also that there are so many deeper penetrations one can do. Blue collar, the white collar space, the engineering space, the technology space. There's a lot of deep penetration. And I think each of these spaces, India is so large with our population that each of these spaces itself can become large billion-dollar organizations, so to be. I think those are very good. I think it was a good idea for you to cover the ambition and set. I think with that, let me move on to Somnath. I think Anil mentioned about processes and how important processes are for the organizations. Would you like to tell us about your journey with processes and how important it is? What sort of processes help the scaling up process?
Yep. Good evening, everyone, and thanks, Pramod. We can understand this. This is a hot topic, and we can see the numbers trickling. Already it's crossed 130, 133. So it's very close to all of us, to all entrepreneurs, all SMEs, MSMEs, and organizations. So let me share the way we started 7 years before, build up the processes, got into growth trajectory, and scaled up. So if I see for first year, we didn't get any business. We were struggling to get a business. And even we got a business after a year, that was a kind of acid test for us. Of course, client is not going to, definitely going to test us on tough requirements. Otherwise, why would they come to us? Because there are so many renowned players in the market, right? So you know that we started from eastern part of the country. Now we tried to deliver to the client. We tried to first process which got built up while delivering to the client. Now the team members which we had, they are not from staffing background. Mostly they are not from staffing background. So it's something we started learning together and tried to deliver the requirements of the client. So this is something. The first process is got set up is on delivery. Second is we joined after 1 or 2 years of started staffing. We joined ISF. There we came to know about the processes which are being followed by stalwarts like Yadavji, Lohit, and Ritu in their organizations. That is related to operations, that is related to compliance, that is related to capital, working capital, and all. So we tried to learn that. We tried to attend as many as seminars possible conducted by Suchita, of course, and we tried to attend those seminars and tried to build those processes in our organization. So as it was going slow, initial breakthroughs were slow. We got some time to develop the processes, to get it updated as per the market. So, and one thing which is striking to my mind that's very important for me, which I feel is sustainability of the process. So we tried to test those processes, locally, or we saw that how it is maturing. So we saw the sustainability of the processes, and that really helped us later on to build up the scalable model. So this is how we developed it. Of course, when we definitely, this team building is one of the process where we don't have people from initially don't from staffing industry, and then but the team was very confident and flexible and take the ownership to deliver. Then also we also learned from our past experiences. We might have burned cash earlier, so this time we are very cautious about on cash, how to manage the cash. So, and one good thing is that there is less money for us to invest on. We don't have much cash in the kitty also, so we got extra process. So this entire processes we followed to whatever we are today, whatever scaling up we did, or this journey we are on. So that's the way we followed it. Over.
Interesting. I like the perspective. When you have limited capital, the jugaad comes in big play. So, and I think the India is all about jugaad. So I'm sure that's nice. Limited resources, maximum outcome. So I think you mentioned about cost. Let me bring this question to Vishy. His background in finance and current role is perfect for it. So, Vishy, what is it that we should do? Scale at the cost of profit? How does it work? It's sometimes we want to scale, but it sort of hits our bottom line. So, how do you want to talk about it? What's your perspective on the same?
Yeah, Pramod, I think interesting, and it can be very tempting as well. So I see time and again how startup founders, they embrace the scale it first, make it profitable later mentality. This is a puzzle because it's also without spending any time thinking about whether their business can actually be ever profitable in the future. So that's the differentiation there. Investing and scaling in an unprofitable business actually does not make sense, because if a business loses money on every sale, growing that business will only increase the amount of money that's being lost, right? So I'm continuously surprised by the number of founders who fail to internalize this. Simply put, I think I look at something called unit economics. And these are a measure of profitability of selling, of offering one unit of your product or service. So for example, Uber, the unit economics will be the relationship between the revenue from their service, that is one taxi ride versus the cost they incur on that. So there is this element of fixed cost, right? So at a high level, the point of unit economics is to understand how much profit a business makes before fixed costs, so that at least all the variable costs are covered. And then if you know what is the fixed cost, you also know how many units you need to service, right? So I see a tremendous number of high growth companies raising money even this year, with negative gross margins. So which means they are selling something which is at a cost them more for making it. So I don't really buy the idea. The idea is obviously to get users hooked, and then once they are hooked, let me take the prices up. But that's a very tough thing to do, So I think I would always say that be cautious, never underprice yourself, and then there is also this concept of risk versus rewards, right? So there should always be your reward should always be commensurate with the risks that you are taking. So I leave it at that now, and perhaps maybe add more perspective.
I have a leading question to the same. Our business, specifically in the service sector, you mentioned fixed and variable and scalability. For us, scale usually comes with addition of manpower, and that's one tricky aspect because we are not. It's not going to multiply on its own. We have to have number of recruiters, and each recruiter does X, Y, Z numbers. So this is one of the tricky areas that we always make mistakes on. How do you think an organization should look at this? What are the matrices that you feel that we should look at that?
So Pramod, that's a great question, and the irony is, we always measure revenues as a key indicator for growth. The question for staffing industry is, given that there is such a huge amount of pass-through costs, is revenue the right indicator, or is it gross profit, the revenue minus your cost, so the salary cost that we spend. So I think that's something to ponder about. So that's where, if we are able to make that differentiation, then clearly we know what's controllable and what's not controllable, right? So, but I agree with you. I think most often the margins are small, and it becomes very difficult unless you scale to be able to cover your fixed costs. So that's the dilemma we have, and obviously that's where some of the key metrics like ensuring the right levels of productivity, and also ensuring that the right level of activities are done. Because I always believe that whatever you do as input activities is what will bring output results. So for a recruiter, it could be, how many mandates they're working on, how many CVs they send, how many first interviews they hold. So I think as long as the organization is driving some of these measures in a systematic way, I think you should still be able to get the productivity levels that you are expecting.
Sure, thank you. So only revenue measurement can probably be the outcome, but measurement of the input can help us to keep the fixed cost, variable cost in checks and control that. So I think, thanks, that's very nice input. Yadav, my next question is to you. I think you've got various products and services that you've done. I'm sure you've gone about designing unique selling proposition for your products and organizations. What should a staffing company look at? What are the key questions that should be pondered upon before you choose your product and decide the unique selling propositions for those, or for the organization? Leave it you to look at a product of the organization.
Pramod, you see, every company have got its own USP, And if a company is a multi-product company, obviously the USP has to be as per the product the company has. So initially, when Genius, we started the business, we started as a recruitment company, and then moved into staffing, then the compliance and payroll, and many other. We got 11 products. But when I think of USP, but there are common in all the product, and there are some addition in all the product. The most common is the people and the technology. And the compliance. These three are the most common. The people which you have, how sharp they are, how they are educated, how they are professionally qualified, how they have got the relevant experience. Because most of we are in a business, in a service industry, So when we deliver the service, the clients get delighted, So then the client looks at you as a company. The first is how the people are there, how long the people are working in the company. So that is the first USP and a staffing company need to have, how the people are there, Then come the technology, because today most of the things in the staffing industry, of course, when I started those days, we had not so much of technology. Everything we were doing with paper and documentation. Even the bank transfer by the check. Unless the check comes, we used to not to give the payment. Of course, today you got 70-80% clients are fund-based clients. So technology has become very important. Entire KYC, entire attendance, billing, collections, everything has become completely online. It is on app based. So how good your technology? So technology becomes another important factor as a USP. And the third USP, when I'm talking about the compliance, is not the compliance what you do for the client. It is how compliant you are. That also company looks at you, how compliant you are. Because if you are compliant, then only you will comply in the company. So compliance is the third USP, and I think it is becoming more significant in current situation where the new labor reform has come, and the cases like Wistron, and there are many cases happening and then the many companies have gone to the court. So these are the three USP. Which is extremely important. Obviously, other USP, whether you can fund or not fund, how much you will give the credit, but those are not USP in my opinion, that you get carried away. But these are the three USP I feel is extremely important a company should have. These are the common which I think about all the products. Obviously, when I have HRMS, it will have a different USP because, the technology requirements are more. When you develop software for a company, your USP is different. When I do the payrolling, then there are certifications, which is very important in that product. When you do the recruitment, what kind of recruiter? Again, the people comes into important. What experience? How many people you have? Then obviously the geography becomes another USP. How many branches you have? How many ESI codes you have across the country? How much software establishment you have? How can you deliver? So there are some, but in my opinion, there are three USP which you require clearly for any product. Is one is the people, and second is the technology, and third is the compliance, your own compliance, and the customers' compliance.
True, Yadavji. I think compliance definitely is one of the key problem areas, and I think technology is one solution to solve the compliance to a great extent. So I think compliance continues to be, I think, one of the reasons why this probably industry continues to need specialists is definitely compliance, because compliance is only getting tougher. Even though technology is coming, but I think the broadening of the compliance is only increasing. Somnath, my next question is to you. For every entrepreneur, specifically the ones who are starting up or MSME and SMEs, what should be the resource? I mean, how do you decide what to spend on? You obviously have a budget. What are the key areas that you come to mind, or what are the spendings that are must to have, or how do you want to split the costs beyond, of course, people cost, because that's something that you can't sort of really do too much about.
Pramod, is that to me?
No, I think it's
Somnath.
Yeah. So So Pramod actually wants to know the recipe, recipe of the special dishes. So see, first of all, if you're talking about resources, spending on the resources, the first thing is definitely the capital. So how good you are managing your capital, the working capital, how good you are managing this capital, that's very important, I believe. One has to be cautious, one has to be economical. And see, when we were scaling up, at one point of time, we are on growth trajectory and all, we didn't see the expense part. So it's very important to see the expenses, and to analyze that and to do the micro analysis, I believe. So that's the first resource which we need to take control on. Second is, of course, Yadavji told about this people. We need to invest on. That's the biggest resource which is required to run our kind of business, of course. Now, when the way we started, mostly the people who joined us were not from the industry background. So it's kind of the concept we started is like, let's learn and grow together. So we learned together and tried to grow together. So, and we tried to take care of their compensation and other perks and all. That also need to be at par with the market. So we need to spend on that. But at the same time, we need to spend on our learning and upskilling as well to be at par with the market. So that's the second thing. Third thing is, of course, technology. I can give you a classic example how it helped us. Initially, we were not very keen to invest on technology. We are handling everything manually. But somehow we thought, let's try to invest on some kind of technology related to recruitment, related to compliance and operations and all. And we kind of invested, and we were got good feedback from our clients, started getting good feedbacks, and this pandemic came on. It just struck. And if we have not done that kind of investment in technology, we would have not been able to manage the way we are managing today. We are not being able to cater to the requirements of the client, which we are doing it today. And another spending is also there, but before that, it is also connected to USP, I believe. So where you want to scale up, where you are trying to scale up, we are into service industry. Let's take it as product industry. Let's take this industry or a domain as a product. So say this is one product, say retail, which is going with our kind of DNA. So there is definitely an investment in sales and marketing over there. So let's not try to do too many things together and invest on sales and marketing and other things which is related to too many domains. That will be difficult. That will, a startup can muddle up over there. So that is another kind of spending in sales and marketing, which is required. Our trusted lieutenant should be in the market to approach the clients and all. So that's also required. And now we can't ignore this online marketing and all. So those expenses are also we need to count on. We need to spend on to be visible in the market and to create the brand.
Sure, Somnath. Thank you. Anil, would you, I wanted to understand this is, how do you think the market is today for staffing business to be able to get access to capital? And what should be, how do you have had a recent journey of starting up and access to capital management. I think at the initial levels, this is a very tricky question that most of us go through. Would you like to give us some experience of yours?
Yeah, certainly, Pramod. So I can tell you that, we have been in business for the last 4.5 years now. And the first thought, of course, we had was, how do we sustain our business for 3 to 5 years? If you have less capital, not able to survive 3 to 5 years, then you ideally not be in staffing business. It's a very, very dicey thing. So most of the funding that we had were, through, it was self-funded with a bit of support from friends and family. So that's how we put together our initial capital to sustain us for 3 to 5 years. 2 years, we decided that we will make losses. First 2 years, we said we will, it will be an investment phase. So we hired, good second line of, team members. We invested in technology. We created our own in-house technology, about 4 or 5 people. We invested in brand building, marketing, because this is an area where I think most MSMEs don't really, give it too much thought, because that is not a priority for most people. So we spent a little bit of budget on that as well. And after the second year, with first 2 years of having losses in our balance sheet, the third year we broke even, and the fourth year onwards we were on the profitable path. But we were quite naive when we looked at capital raising. We met venture capital people within our network. We met some PE companies. We met even family offices, investors who had family office investments. What we realized at the end of all of these meetings, we must have done about 14, 15 such discussions. We realized venture capital funding people are not going to be investing in staffing business, because they want returns of 10x, which only technology companies can give, right? They were looking for any company, any industry, any business that is powered by real technology. You could be selling tea online, you could be selling anything, but if it is powered by technology and your business is scalable, really, they gave us a formula 3 times in 3 years, and that kind of a thing. And we said, that's not the space that we are in. Our business can probably not give that kind of returns. PE companies only write checks which are more than maybe 50 crore kind of a thing. So even the most modest check right is that. Probably the best bet would have been family offices. But after all these conversations, we decided that we will run, since we have turned profitable, we'll run through our own internal accruals now. And the other thing is, working capital is another area where banks don't fund you if you're making losses. So the first 2-3 years, obviously, it was difficult for us to get any, even working capital. We didn't get any credit line. So once we started making profits and with some security, it is required. Banks don't just give you money, no matter what your backgrounds are. So with some security, they certainly allowed, bank credit, and we are accessing that bank credit. But what we also did, we were fanatic about collections, and particularly in the pandemic time, we thought that, we're going through some really difficult payment receivables cycle, and we put a lot of energies there, and we brought our DSOs to less than 30 days. Okay, so all of this helped us to, not really look at some serious borrowing or capital from outside. We just could manage it through our own internal resources and our network. And bank finally came through. Banks, when they start seeing you making profits, they start, giving you credit line. But of course, they would take some kind of a security. We even tried, some of these venture funding, or people who would offer credit based on your receivables, those kind of things as well. But the cost of capital is very high. It's 14, 15, 16%. Even if you go to an NBFC, they would charge you 14% interest. Those interest rates are a bit unsustainable for a company like a staffing company. And we all know our EBITDA margin is 2 to 3%, right? So when you run on such, unless you're a pure play, professional staffing company, you're in engineering, IT, you only do that, you don't do general staffing, then your EBITDA can be in the excess of, let's say, 5 to 8, 10%, right? So then you can probably afford to raise, go to NBFC, or, based on your receivables. It's a very complicated thing. They want to create an escrow account, or they want the creditors to pay them directly. It's quite complicated and messy for you to even set that up. But we avoided all of those things. But fortunately, since we turned profitable, we could access, bank credit line. It just came at the nick of the moment, and it helped us, but I think if you have a scale, if you have a big ambition and you have a good track record, I think once you hit a 100, 150, 200 crore mark, or even let's say even a 60, 70 crore mark and above, there would be opportunities for you to raise money even through some other investors. Maybe another staffing company wants to have a conversation with you, or some other company related businesses, for example, some education company wanting to build, staffing and recruiting. It's like a backward integration for them. So they would probably, make an investment. So a lot of conversations do happen, but then, this is one difficult area. Like it is in the same case as people, hiring good people. Capital raising is very, very challenging area. And in India, of course, its cost of capital is very, very high. So if you're not prudent, you may end up a lot of, of your, money. See, I know companies where they have good EBITDA, but PBT is almost negligible because they paid out all the money through, their earnings through investments, through interest rates, and they become almost, EBITDA, PBT break even or even negative. So EBITDA level positive, but interest costs are so high, it also becomes unsustainable in that sense. So it is difficult. You have to really sustain it through your own funding initially.
True. I think this is a true challenge. Two major pain areas. One is, of course, banks don't want to come back and initially fund you. Though I think GST regime has made it slightly easier. I think some of us would have enjoyed the benefits of GST and banks giving us loans based on our GST because our outputs are usually high if you're a staffing company with even slightly larger scale. So I think that's helpful. But yeah, I think it's
just one more thing. The LDC is another good thing. We always helped us. Like you apply for lower tax deduction, certificates, and you generally get it in a month's time. It adds a lot of strength to your working capital. And these days you can get it in about a month's time, month to 45 days. So when the year closes, April is a month when you get you have an overdrive on LDCs. Then by the end of May, April, beginning of May, you can probably get your LDCs. Then you don't your clients won't deduct that 10% TDS. And in staffing, that's a killing thing. Your salary plus the markup, everything is inbuilt into it, and clients are deducting 10%. So if you get LDC, you can probably get it at maybe 0.5 or less than 1%. So that's a saving grace for you. So some of these things, if you're financially very, like active and prudent, it's possible to make these small gains.
And I guess these are the small gains which are required to actually conserve and build more stronger capital to scale. I think tricks of the trade are to conserve capital or be able to reduce interest costs in the initial side, work your business models, which can make sure that you probably don't have to scale only based on capital. And I think that's an interesting point. My next question is to Vishy. Technology, we've spoken about, Yadaji mentioned about technology, Somnath mentioned technology. It's not an easy bullet to bite for any startup, MSME, and technology is, has no end. It depends on where you want to start spending and where you want to end. So at what stage, how much should you spend? What percentage of your investment should go into, technology? Are you overdoing it, underdoing it? Can you give us some perspective to this?
Okay, so thanks, Pramod. So actually, if you look at it, in the last 16 months, when we have gone through the pandemic, which of the companies have really thrived? For example, I would name, say, Amazon or Flipkart, or those companies, and these are companies which have deep-rooted technology. They made huge investments, and they were the ones who thrived in this pandemic, right? Now, for staffing companies, we are mostly into a B2B business. So our client, so we don't have end consumers, but we do have all our customers also run their own business. And where we struggled was, obviously, we learned fast. We were able to work from remote, get payrolls done, invoices done. But then, I think there was also a little bit of disruption, especially for the smaller staffing companies. They were not able to do it because they were also not able to go to access to their offices as well. So I think we are going to, as you see, there is a digital tsunami out there. There is so much of investment that's happening in technology. Companies want to actually be ahead of the curve in terms of the investment. And by the way, there is a myth. Actually, we always think technology means it involves huge investment. But today, technology comes at very cheap prices. It's shifting from to SaaS models, cloud computing, etc. You can actually buy technology as you buy your consumables. So you pay them as you use. So that kind of models are emerging. So I would say, rather than thinking about large investment, look at what areas require attention, and the focus should be more around those areas which are repetitive in nature. So for example, if I look at collecting, say, onboarding people, right? Onboarding is perhaps the starting process in staffing, and you got to do it again and again and again. So maybe these are areas where you can look at technology, so that you are also able to give today it's not just about getting things done, it's also about how can I use technology to improve my business. For example, we have this challenge of dropouts, right? So we make offers, we expect the candidate to join after, say, 60 days or 90 days. On the 59th day, you get a regret from the candidate. So with technology, actually, you can understand what patterns are emerging, and we have seen that, in our business, we have seen that it may be coincidence, but candidates who were hired from a certain city or a town, they were dropping out more than others. So there is a lot we can learn through these analysis. And then also, I think the last thing I would say is technology also creates good customer interactions. It creates a good experience. You're able to give them more value for what service that it provides. So it also makes them feel excited about it. So I think the answer would be really look at areas. Don't think that this is a big investment. Mindset where you can make investments in pieces, and at the same time focus on repetitive and also those which are providing a good experience to your clients.
Thanks, Rishi. I think interesting, and yes, true. Today's time is about cloud, and cloud definitely makes it more accessible. With per person per month costs, you do not have to worry about capital, but of course working capital. And I think that's a easier problem than trying to just work about capital, though it can be a sweet expense, because if not checked, the working capital expense can go really hard, and cloud can be expensive. So it's a tricky one, but interesting. And I like the subject about HR analytics. I think one area where staffing industry, personally, I feel lacks is about analyzing its own information and data. We churn out a lot of data. We've got offer drops there. We've got city understanding. We've got probably a pattern on the education, probably the industry pattern. There's a lot of information that is lying around with all of us in our own various Excel silos. If we are able to leverage this information and put together an analytics of our sorts, it's definitely going to sharpen our access. I think very interesting perspective, Rishi. Personally, at our organization, we are at this transformation at this point of time. I think we've got a question. I request all the audience to sort of answer. I think it's popped up on your screen. It's reflecting, it's about technology. So I request each of you to come back and just submit the same as well. I think it's not going to take you more than a minute to do it. Moving on, I think with technology having understood, I think important problem or important point, I think, which we can't not discuss is about people. I think at the end of the day, it's the human resource industry, and people are the most important pivotal part of the same. Yadaji, I'd like to ask you this question. What are the 2-3 things which you feel that organizations shy away from discussing, compensation? How do you decide to grow people? What are the talent strategies? What are the things that you experienced, you've implemented in your organization, or you've seen in the industry?
Okay. Pramod, so I think we are talking about how to retain good people in the company. Okay. Let me give you the backdrop first. Today we have around 430 people in the organization, Genius, and those who are on our payroll. And out of 430 people, about 108 people are on the leadership positions. These 108 leadership positions people, out of that only maybe 3 are recruited from outside. That means as a leader. Otherwise, 105 leaders have grown, shaped within the organization, and most of my top level CEO, vice president, general manager, president of the organization of Genius would be anything between 15 to 22 years in the company. That's a backdrop. But I think in order to achieve this, I won't use the word it is painful, but I think it requires a commitment from the promoter, from the director, and as an organization as a whole. It's like being a parent when you have a child, when the child comes into the home. Right from beginning, you nourish his cycle requirement, his toys requirement, going to kindergarten, going to school, going to college, giving him bike, giving him, helping him to get married, helping him to get a job. We consistently. So, but in between this, when we step up the child, it's not that the child does not make a problem. He makes sometimes nonsense. Sometimes, very serious problem within your house, but you pardon somehow because you know that that is your child, and you try to step up. So in my opinion, I think the organization has to commit to retain the people, particularly the good people. But when I say the good people, you must also first learn to recruit good people. Because if you don't know to recruit good people, so there's no point retaining the people, because as much you retain, that guy is going to create a nonsense in the organizations, So the first thing one has to learn, what is my requirement, What is that I want to do, What kind of people I want to recruit, What is the education? What is the kind of culture I want to create? Which culture I want to take? How many years experience I want to take? I want to take a management training. I want to take a freshers. Do I want to take a postgraduate or only graduate? What kind of marks I want to take, Once you are very clear on that, and then your JD, you are very clear, you recruit right people, and then you commit yourself, Once you commit yourself in terms of compensation, in terms of its growth, in terms of job, in terms of accountability and responsibility, and steer, you participate, create an engagement program in the company, and you will find the people will stay and will retain. You will be able to retain, and that's the experience I think you can derive from a company like Hindustan Lever, Procter & Gamble, IBM. Most of the top level people are old within the organization. Nobody would be recruited as a CEO or to head the company on IBM or Hindustan Lever or Procter & Gamble from outside. It will be always from the within. So taking the clue and the experience, or even some of the big company like in India, you have ITC. These are all the big company. We have Asian Paints, Virgin Paints. They're a large company and doing extremely well as a listed company. You will find most of the company, they have been able to retain, step up, and make the people senior in the company. So retention is basically is a commitment. B is getting a right talent in the organization. C is shaping them with the understanding that I want to retain and I want to make him as a part of a senior team leader in the company. And then you will find it will give you a very good result, and people will be retained in the organization.
Yeah, would you also like to talk about what other things that you've done from your journey beyond compensation to be able to retain people in terms of being able to grow them? Of course, you spoke about most of your, I think, your journey of 108 leaders you mentioned, Yadav, have come in. So I think that's one. Can you spend some more time telling about your leadership growth strategy? That's an amazing number. Out of the 400 people, 100, and you managed to retain all of them or grow all of them internally. So would you like to give us some magic recipe there?
Okay, so Pramod, as an organization, we continuously learn from others, and if you take the bite from most of the large big company in the world, and even in India, you will find the continuously but then you start as a small company. So even Genius was a small company in the beginning, but what I did, first, I had a minimum marks, 58%. The guy has to be a postgraduate. In those days, even the receptionist I had kept, though they used to keep reception. Of course, nowadays you don't require receptionist. She also has to be a postgraduate. I was an idiot, but then that's what my criteria was there, So once you recruit such kind of, so why I did so, I'll go to visit the house also in the beginning. Of course, nowadays you can't do because every day you have someone or other joining across the country. So why I did so? Because I wanted the people like-minded, educated, talented, high IQ in the company. And once you have such kind of people, then what is that they want? They want to step up their career. They want to stay in the organization. They want a good compensation. Whatever they have learned, they want to explore that. So you create a template. You create an atmosphere by which they work and they work with the speed. That means how can this speed will come? You generate large number of clients, you generate large number of activity, you develop and bring more product into the company, you open more offices. So you create situations by which they work with a speed and they grow with a speed, Now, when you say a speed and when you create a speed, you also need to create an engagement. Because I believe that a guy, unless have 10 friends in the organization, is not going to stay with you. So every guy in the company must have at least 10 friends, whether it is in the same office or whether it is with Delhi, whether it is Bombay, across the country. But you must create a friend, Now, how can you create a friend? You can create a friend by engagement. So what are the engagement you have? You have engagement like birthday celebration, you got a picnic, you got divisional celebration, you got location and celebrations, you got product celebration, you sign a contract, big contract. Even if you give one Rasgulla, that is a celebration. You have New Year celebrations, so various engagement. I mean, we have around 36 engagement program in the company. So once you create an engagement program, so with that engagement program, the people gets binded with the organization. People creates friendship with the organization, and they like to stay with the organization for a longer time. And ultimately, you have a good team and you relax as a promoter of the company.
Interesting, Yadavji. We have a lot more questions, but I think I've got some questions from the audience. I'd like to take some questions from the audience, and in case we have time, we'll come back to certain questions I had in mind, which was there. Probably some of that will get covered during the Q&A round. We have one question from Priyank Chopra. This is for Anil and which for you. This is about, can you please share your thoughts on team size and capital funding that should be raised in the context with milestones you mentioned. So milestones, I think, Anil, you set milestones for us, and Vishy, you can answer the capital and size question. So over to both of you, please.
See, it's it's not something which can be spoken about with limited information. All I can tell you is that our ambition, Expino's ambition, was to be 1,000 crore company. So we saw the investment that we needed. So we earmarked that in investment for us. And alongside, we kept meeting investors and saw what is their appetite to invest in company like ours. So it's not something which I can offer as a thumb rule that but if you're going to be in staffing business, you certainly need a couple of crores to at least kickstart. Otherwise, it's not something which will offer you enough runway. So I mean, I'm blinded with a lot of other considerations. So I'm just saying that, you know, you, based on your ambition and based on what you want to create. You know, when we started out to meet some investors, they asked us, are you lifestyle entrepreneurs? We didn't know what it meant. It basically meant that, are you guys going to create a company that is enough for yourself and, you know, gives you a good lifestyle, and probably you will pass it on as inheritance? Or are you going to really seriously think of building a big company? So these were some of the thoughts that we had, and then we put enough capital in it, as I said, to sustain us for 3 to 5 years, by which time, you know, we you know, could become profitable, and we could now sustain through, you know, internal accruals and with some bank credit to help you on a working capital. That's how our thought process worked. And you also got to create your company in terms of business mix. Are you going to do both perm? Are you going to be in general staffing? Are you going to do professional staffing? All of these, you know, product offerings are going to create, are going to dictate how much of capital you need. So with that basic question, it's not possible for, you know, to give, you know, a proper answer. What is the second question, Pramod?
Actually, the second question is similar. So, you know, the question, I think Priyank is here, but I think the tricky one, but let's say if you are a 1,000 crore organization, what could be the team size that one needs to do? What's the funding that needs to be raised? He's not said what milestone, but Priyank, what particular milestone do you have in mind? You wanted to know the team size and the capital. Do you have a milestone in mind that which you want to get some understanding? No, I don't think we can hear you.
Let's say, I know we want to be a 25 crore company in next 3 to 4 years. Am I audible?
Yeah, you're audible now, right?
Yeah. So you know, we want to be a 25 crore company in next 3 to 5 years. So and you know,
is it a staffing business, general staffing, professional staffing, RPO?
We are into mid-size IT staffing, technology specifically.
Okay.
Yeah, so we are, you know, we want to go there. We are already touching somewhere around 3 to 4 crores. We might touch. I mean, I'm not sure we have to, you know, returns, but anyways, so you know, we are targeting maybe a 5x growth in the next 3 to 5 years. So in that ways, you know, so what happens is, you know, either should I recruit, or you know, should we scale up as in terms of team members, or should we focus more on raising the capital? Is you know, is a dilemma. So how do we balance both?
Yeah. So obviously, there are some templates already running, you know, in companies. I think typically recruiters, IT recruiter is able to source between 1 to 2 candidates a month, right? So you work your math in the manner that, okay, if I need to do so many onboards, so I may need so many recruiters. Also, you need to factor an attrition of monthly attrition about 4 to 6%, right? So when you do this math, then you obviously get an idea of how many recruiters do you need. And yeah, that's one. I don't think the technology is so evolved that you know, you can have a lot of leverage using technology as of today, particularly in an environment where it's you know, high demand for many different skills, and people are complaining about 50-60% dropout rates. I think no technology can deal with this kind of you know, dynamic. So you may probably need to have really high touch business, which means that, of course, recruiters are continuously talking to candidates. There are some aspects of it which can be automated, which is probably a sourcing activity, or the first calling, you know, to check the interest of the candidate. There are products that we have experimented with. Those areas you can certainly, you know, automate to some extent. But I would still think 70-80% of the task is quite manual and traditional in that sense. So it is people intensive to begin with. I would say that a recruiter, IT recruiter, is able to onboard between 1 to 2 candidates. So you work out your math in such a way that, yeah, I may need so many resources. Then maybe an account manager, some back office people. But our approach was that we had resources, and then we went out to clients. It wasn't that we, you know, our first few months, I think there were even a couple of years, I would probably think that we had initially timed that, you know, not enough job orders were, you know, available to our recruiters. And each empanelment of a client took us 6 months. It did not happen like, you know, we thought it could take lesser time, but it did take us a lot of time to really go after this marquee customers that we were pursuing. And
I can relate to this.
by the time you start billing them, you're seeing already a 6 to 9 month horizon, from the time you connect with those clients. So those are the considerations that you have in mind when you are staffing your team. But there would be months and weeks where sometimes you'll be under loaded in terms of mandates. Those are part of the thing that you will have to go through initially. You can't really time the mandate load and the recruiter in such a fine manner. You probably will go a little excess on resources because you don't want to disappoint your initial few customers. You've sold them, you've got an entry, you want to impress them with great speed and quality, right? So you don't want to, once get a business, you don't want to underperform, underdeliver. So a bit on the manpower side, a little bit more slack tends to help early on. And attrition rates in staffing industry is up to 40%. So you keep losing people. I heard Yadavji talk about it, but then when you're in a city like Bangalore, Mumbai, Hyderabad, you're recruiting, you're an IT business. After IT, techies, I think the next sought after job is recruiters today. So people are getting 2x, 3x times their salary. So you will have 50% attrition. So you better build a little bit slack there, a bit buffer. So those are the considerations that you have, Priyank.
All right. Thank you. Thank you.
Yeah, and I think just to add,
you are muted, Pramod. You are muted.
Yeah, I'm back. But Vishy, you have a point, so please go ahead.
Yeah, just to add, I also heard Anil talk earlier about. I think I agree with most of the things. One thing which we also know that when we are dealing with IT companies, they have slush with cash. So for them cash is not a problem, and but for staffing companies, they expect say 30 or 45 or 60 days of payment terms. So maybe another thing which you can look at is some companies are open for vendor financing, because as an IT company, they have a much bigger banking relationship, and they are able to leverage those banking relationships to give you a better financing. So you still need to pay a small cost for that, but at least you don't need to worry about capital, because most of your bills get paid on the day you maybe within 2 to 3 days from the day you pay the salary. So that's one thing maybe you can look at.
Very right, absolutely. I think the IT industry still you are able to leverage that for sure. The next question is from Sharad Dhawan. For an important and essential service, why are the margins in this business so low? Is the value add low? Yatish, would you like to take that up? It's not marked to anyone, so I'm.
So, Sarad, of course, it is a employment-oriented business, and it is very important industry for the nation. And but let me tell you, when we started somewhere in 2001, this business, our markup in general staffing used to be anything between 18 to 20%. And even with that, we were not happy. We used to make the payment. Those days, this clearance was not online, no NEFT or EFT was available there, or money transfer was there. So we used to make the payment only when the check used to get realized of the client. That means, even a company like a multinational company, I don't mind saying like Colgate, unless his check will be in cash, we used to not make the payment to associates, So those were the days and era, But who has made it this? Who has slided this margin? It is we have slided the margin. Then came all the multinational in India, and we had a severe competition among ourselves. And from 18 to 20%, it came down to 15%, then came to 12%, then came to 10%, then came to 5%, came to 3%, then came to 150 rupees, then came to 100 rupees, I'm sure someday we'll sign at 10 rupees also. I'm not very sure on that, So who has made it? It is we have made it. Nobody else have made it, Sarath. And we are all responsible for this, But let me also tell you, there is a future. You have seen the various era. You have seen the TV era. There used to be more than 360 manufacturers of TV in India. Today, how many manufacturers are in TV? There are no. And we are buying TV once upon a time. When a new TV comes, we buy in lakhs. The same TV we buy in a small price. So this era also will move away, and you will find that gradually the margin markup will definitely go up. But it's a consolidation phase, and in this phase, I think we have to sustain, and if you can sustain, you will reap the benefit. Like insurance, when it came into India, you saw what a fierce competition was there, and they were not making money for at least 5 years. Today, same insurance company, listed company, you see how much profit they are making. In those days, it was very difficult to find a guy who will join an insurance company. But today, people are interested to join insurance company. So every time there is an era, and we are passing through this era, but I'm sure, I think the margin is going to go up. I mean, that is what I have believed.
Thank you, Yadavji. We have 15 minutes to go and a lot more questions to cover. So I'll be a little quick, and in case we have time, I'll try and cover some more. Yadavji, the next question is again to you. Recruitment industry is experiencing big time attrition and opportunities of opening very less comparatively. Any suggestions and opinion to get this improved?
Yeah, recruitment industry is passing through, I would say, a critical stage. Critical is that there is a huge demand in the market, particularly IT, pharmaceutical, health industry. There's a huge demand, and once this unlocking starts, and probably from the July onward, you will find that there will be huge demand from most of the companies. And when there is a huge demand, obviously there will be attrition. Today, I'm finding that people are having the offer from multiple companies, 4 or 5 companies. Still, they come for the interview. So probably from recruitment company angle, I would say that if you have an X requirement, please work on X plus Y requirement. That is the one solution which we have taken up. If I have X requirement, we work with X plus Y requirement. Because the people at the time of interview, somebody says no. The moment you say that, okay, what is your expectation? The expectation are anything nowadays less than 30%. Nobody talks. So 32. I was surprised. There was a guy who said, at least humko 250% is Then only I join. Why? Because I have another offer. I'm already having 100%, double the salary I'm already having. So why don't you give me 250%? Then I'll join. That's the situation today. So in my opinion, it is definitely a critical stage, but you will also appreciate, there is a huge demand, there is a huge opportunity. And therefore, every recruiter have a chance to place. But obviously, one has to work. So we have to speed up. We have to increase our speed. We have to increase our delivery. We have to make X plus Y arrangement, either in terms of your own recruiter, and then be successful, in my opinion.
Sure. Thank you, Yadavji. The next question is, it's open to all. When a general staffing company decides to scale up drastically, is it really worrying aspect if the interest component debt funding is high and it becomes a major portion of your overhead expense? I think we spoke about that a little bit, but would any of us want to comment on that? Is that worrying, the interest cost, in case it's going up?
Can I answer?
Yeah, please.
Okay. See, there is no option, in my opinion, to be in this industry without scaling up. Because if you don't scale in terms of geographical expansion, the various kind of manpower, either for compliance or for onboarding or for recruitment or for various requirements which we have, in technology, there's no option then to scale up, because you will get a company which has a presence in, let's say, 10 cities. If you don't have a ESI registration at 10 cities, probably you can't sign that contract, or maybe you sign, but you will not be able to maintain that contract. So there's no option, So one has to scale up. But to scale up, in my opinion, I think Anil has spoken. Vishwanath also has given a lot of impetus. See, one of, I mean, how we did, I can say only that I think the best thing is to go through. Ultimately, Anil also said that ultimately the bank OD, they came into that, So bank is prepared to give OD, provided if your balance sheet is good and for X amount of FD, or if you have some collateral to against a collateral company bank gives. In my case, in our case, the balance sheet was fortunately right from beginning it was good. So for X amount of FD, I used to get initially it started with 3 times. I went up to 8 times, of the FD whatever you give, you give of that we were getting 8 times of that amount as a OD. And with that, business kept on continuing. Ultimately, you develop a friendship with the bank, and bank manager will tell you, okay, आप business लाइए, पैसा हम आपको देंगे, because ultimately they want to earn the interest, But I have found, unfortunately, what happens, that when you have the money unnecessarily, you start spending the money which you don't require to spend, and as a result your working capital becomes big, and the moment your working capital becomes weak, it is very difficult to survive in this industry, because this is such an industry. Maybe you have signed a contract where you have a collect and pay basis, you don't have a funding, but the client may come at least once or maybe twice at a year ki wo secretary nahi hai, ya the guy is sick, my finance guy is sick, aap de dijiye paisa. Can you say no? You can't say no. And if you say no, then that client feels that you are not credible. मेरे को एक बार जरूरत पड़ा and he will not give. So let me, and then he goes to somebody else, So that is why big becomes bigger, small becomes smaller. So in my opinion, we need to scale up ourselves. There's no option in mind.
Sure. I think we have limited time, but I'm going to try and take all the questions, some of the questions which haven't got covered, and in case we have time, we'll cover more. Vishnu, this is for you. How important is to maintain a healthy DSO? I think you already answered that question, but what is it defined as a good DSO range? I think.
Okay, thanks. Thanks for the question. I mean, DSO really depends on your contractual credit terms that you have agreed with your client, right? So it could be very different. Ms. Yadav just now talked about collect and pay terms. So if your majority of your business is on collect and pay terms, your DSO should be ideally less than 5 to 7 days, right? Because you are not funding any of the salaries, you're getting paid and then you disburse the salaries. But in an IT staffing business, it could be say 30 or 45 or even 50 days. So on a ballpark, I would say anything less than 30 days is good. Because that I think is also meeting the average, which you also see in other industries. So I would say anything less than 30 is good.
Sure. Thank you. I think there's one question, which is general question. What are the prospects and challenges from gig economy in India from growth perspective in staffing industry? Anil, would you like to take an attempt? I think I've read some of your gig posts.
Sure. So I think certainly it's offering as a alternate to contract staff, temp workers. India has about 3.5 million temp workers, and gig. Actually, there are many layers to gig. You can generally it's now referred to as people who are food delivery or Uber and those kind of. So gig is loosely used in the context of low end workers, last mile delivery, connectivity, and those kind of things. Many companies are, of course, getting into it and paying on outcome. So the game there is you pay on outcome, not based on, of the person who's working, not based on time spent. So it delivers X, Y, Z, then you get paid straight with that, outcome. It is an option that some of the companies are using, particularly the new age companies are thinking even contract staffing, temping is expensive as compared to gig workers, and it meets their model, right, business model. So it is an option, but I think all of them will continue to coexist. Staffing will continue to coexist with gig, and permanent employees also would be required on forever, I guess. So in that context, while it does offer an option, but I won't say it's necessarily a threat. And also there is another thing, Pramod, that I'm seeing, that government also wants to regulate that now. That will be a difficult thing. Once they go to regulate that, that means there won't be much difference between a temp worker and a gig worker in that sense. So they have more.
Sure. Yeah, I think government regulation will make a lot of level playing platform for both these roles. One more question is ATS mandatory? So, Somnath, would you like to take that up? Is an applicant tracking system mandatory? That's from Vinay.
So if it's connected to, see, I will not say it's mandatory, but day by day it's getting important. So, so if you can always, I will always suggest in nowadays, in today's world, if whatever investment we are doing in any kind of technology, that is going to help. So if we can invest in that kind of systems and processes, that is definitely going to help us. But it is always good to track through this kind of systems. That's always better. That will definitely enhance the productivity of our recruiters and our other processes. So I feel, we can always go for this kind of system.
Sure. One question which is from Raghavendra Prasad. My question is around expansion globally. What, according to you, could be the plan for the first year? This was actually one of the questions that I had put for Vishy also. I think, Vishy, that was a question I wanted you to look at. Please, would you like to take an attempt on that?
Yeah, sure. So I think definitely there is no harm in expanding globally. But if you look at it, I think the SIA report, it talks about the most attractive staffing markets in the world, India and Malaysia, right? So, and then some of the other markets are more advanced, in the more organized countries. I think you also need to be aware of the geopolitical relationship, the situation, what's going on, how are the labor markets emerging. Some of the advanced countries, the labor markets are very organized, and there could also be some markets where you have unrest, labor relations, etc. So these are some things that you need to consider when you are expanding geographically. But yeah, I think there is a lot of reports and research that is available in SIA. So maybe you can leverage on that to see which markets are attractive before you make the decision.
Sorry, I was on mute. I think this one, in case Raghavendra, you would have more detailed questions, because it's quite a detailed answer, which I'm sure we can give you one-to-one later. So you can connect with Suchita. I think most of us are open to connecting one-to-one to take questions, of course, routed through the Secretariat. I think Suchita would, Suchita and Secretariat would facilitate that. There's one question on biggest employer is government for staffing, and most of the tenders are quoted very less % margin or no margin at all. What do you suggest, and how do you suggest to go for it? I don't do business in government, so I don't know. I think Vishy or Yadaji, you can answer that. Somnath, you also have exposure to government.
So shall I say who has asked this question? Who has asked this question?
This was asked by Gajendra Bikare.
So Gajendra, my answer would be that please avoid it. We subscribed to a 24/7 tender for almost 4 years continuously, navigated so many tenders of the government, participated in so many tenders across the country. Finally, we have just 6 clients. It is so unfortunate, You will find there are people who gives the quote in the tender, nil margin. How can you give with the nil margin? There are tenders which says that payment will be made as and when it will be available. It is written in the tender. How can you participate, So unless you have a big pocket, and you have a money laundering behind you, then only you can go. Otherwise, at the moment, in my opinion, I think we should avoid it, for the time being, in my opinion.
Yes, no one can say when money is going to come. Even if it is 60 days, you don't know it is going to come in 90 days or 120 days.
I think the biggest example is his skilling company. He has a skilling company, and most of the project is the government only, and that is a mandatory project by the PMO. So fortunately, because of that, money is released in time. But still, I would say that I think Somnath can throw some more light, and even Pramod can throw some more light on this.
It's a tricky business for sure. The cash flows are, it's going to come, but when do you see the cash flow is going to be a long story. So it's a tricky one. And specifically for the staffing business, you're absolutely right, Mr. Gajendra. There's hardly any margins left for an organization. So I don't know how people who are doing a lot of business there are doing. We also like to stay as much as possible away from it. But I think I leave it at that. We have one more question from Siddharth. What is the right mix for any MSME organization on percentage basis for collect and pay and collect? So that's a tricky one. I think, Anil, I see you smiling. Would you like to take an answer to that?
Yeah, I mean, if you're a general staffing business, obviously, I think majority of it should be collect and pay, right? Professional staffing, the market demands you to offer 30 to 45 to 60 days credit period. They always give that extra buffer of 10, 15 days, nobody exactly pays on that particular date. So for the general staffing business, contractually, everything should be collect and pay. There is nothing that you can do to even sign up a client in general staffing which says that I will pay and then, you can pay me, I will collect later. So depending on your own, client mix, like I said, the market has set certain precedent. So then you follow that in professional staffing, general staff. Even in permanent recruitment, if you're doing, you have to allow for 30 days time period. Nobody pays you, before that. So given all of these, all the current practices, gives you a guidance on, what is the credit period you need to offer.
Since you mentioned, Anil, I'd like to share one quick experience on permanent recruitment. Some of the things that we practiced is specifically while working for organizations in the MSME range, in case they would come. We have come back and said we'll reduce your cost, which is revenue. I mean, our sales. I mean, we don't work at flat 8.33. We may work at much lesser, but we bring down the attrition cycle for them, and we say our payouts have to happen faster, because I think that is one problem in the permanent recruitment side.
Yeah.
So not so relevant for us, but I thought since you mentioned, I think it's one of the tricks or trade that one can do.
Sorry, we have a limit of the time. So we can only take maybe two more questions. One, Akash has put up a hand, if we can let him ask the question, and one on the wage code impact of staffing, and then we'll have to close today. So
sure, I think Akash, will you like to come in first, please?
Yeah, thanks, Pramod. I don't have a question, but I just wanted to add to the point of government being the largest staffing customer. I think recently we noted that Questcorp being the largest private sector staffing player, they have made a 180 crores of provision against the government dues. I think which historically was never done by any large staffing company. So I think that is a big question raised in the investors call also. So I think what they have also made a point that they will not do government business, and they will kind of shut it down in a recent time. Just wanted to add to that point.
I would like to
very interesting. I think
questions on any particular company. So if we can handle it on a generic basis, we can, but there is no particular company's opinion, or on basis of that, we can make any comment over here.
Sure. Then the next question is on new wage code. I think we've had a discussion on the same earlier, and I think we will have more sessions on new wage code. But I think the new wage code is going to allow companies to hire directly on FTC, which is fixed term contract. Do you see any impact on staffing and companies and their businesses? Rishi, would you like to take it?
Yeah, I mean, I see the new wage code as being progressive. I don't think it's going to diminish any segment. So everything is going to self-sustain, you know. So maybe there is going to be more gig coming. There is going to be fixed-term contracts. There is also going to be staffing and so I think we will learn how to thrive with everything working together, and this also provides us better opportunities to meet the client requirements and tailor make our solutions to what fits them best, you know. So I see this as progressive.
Thank you, Rishi. I think we have a lot more questions unanswered. I think that leaves a question mark, or rather an answer, Suchita, to you, that we need more sessions like this. This is getting interesting for sure. We had over 150 participants at peak, and we are with about 100 people right now, and almost 10 unanswered questions. On our agenda, we had at least 4 to 5 points which I haven't been able to cover. So that's quite an interesting session. I thank all my panelists for the wonderful time and session that you've got. I just want to leave one thought with all the people on. I think we had a very nice milestone being set by Anil, saying that we can have 50 more 1,000 crore organizations and 8 to 10 billion dollar organizations in the staffing business. I think the times ahead, we must, as ISF members, look forward to creating that. So over to you, Suchita. Thanks a ton, everybody.
Thank you.
Thank you so much, Pramod, for this very, very exciting session. I must say there was not even a second that I could, not pay attention or not, understand what the gravity and the interest with which everybody is today looking forward to this session. Thank you so much, Mr. Yadav, for the huge amount of experience that you have shared with the participants today, because I'm sure there is a lot to take home from what you have discussed today. Thank you so much, Anil, for the great insights that you have given, the numbers that you have showcased. Vishy, I am sure a lot of people are going to come back to you with suggestions on the cash management and the capital, working capital, etc. But there is a lot of insights that we could pick nuggets today from you. Somnath, your hands-on experience and the way you have touched the hearts of most of the entrepreneurs who are in the startup or the SME phase, I think you have banged on, touched the pulse where the problem is today for them. And I'm sure there are questions still coming in, though we are closing it, but we'll try and address it in a subsequent session. We will definitely try to have a follow-up session to this one in the coming couple of months. And last or not least, thank you so much, Pramod. This has been an experience itself. With this, we'll close it today. But we'll try to see if we can address these questions. You can always write to us. And reach out to the secretariat, either to Saurav, Abhishek, or me. We will try our best to get you connected to the speakers that have joined us today, so that they can one-on-one share the answers with you post this session. Thank you so much, everyone.
Thank you,
Anil. Thank you,
everyone.
Thank you, Pramod.